Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, and the day-by-day forecast for natural gas. So back to the technical analysis. Today we're down 11 basis points on the 1 hour chart. We were touching oversold RSI, however we made a nice reversal throughout today. And on the 4 hour chart, we are now in negative MACD and we see a nice reversal. However, we're at a 9 moving average resistance, and if we expand that further to the daily chart, we start to see a slight reversal in play. Reason why, we do see a higher low made in place, and we also see that we encountered the same resistance that was around the price of $1.94. We did reverse down and head lower from last week. And as we see or progress throughout the days, we are now on positive MACD. There is a reversal in play. So at the moment, if we do manage to head up higher, we'll continue to see $1.94 as our resistance, and that price movement is roughly around, I would say, 11% to the upside. And as for support, if we do manage to fall and head down lower, I do see this higher low acting as our support. So that price movement to the downside, it is roughly around, I would say, 5.4% to the downside. So let's head back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as the days progress to the 7th day, we have a 43% chance for natural gas to climb higher between 0 and 5%. On the other hand, we have a 29% chance for natural gas to fall between 0 and negative 5%. And on the extreme case, we have a 29% chance for natural gas to fall between negative 5% to negative 10%. So let's head to the day-by-day forecast for natural gas. So as the days progress, we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is best matched to the current trend. Right here on the blue line, we have our current trend, and overlapping it is the trend that I believe is the best match. And the trend right here is the current trend, and below is the trend that I compared it to be the best match. And this trend dates back to June 21st, 2011 to September 15, 2011. So let's compare the two trends. So what we have here on the current trend, we start off at the upper Bollinger Band, reverse down lower to touch the bottom Bollinger Band, and touch the upper Bollinger Bands twice. On the trend here, we start off at the upper Bollinger Band, dip lower to the bottom Bollinger Band, and reverse to touch the upper Bollinger Bands. So what we have here is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was June 21st to September 15, 2011. Back then, natural gas was down roughly, I would say, 4%. So that coincides with this standard deviation right here of 29% chance between 0 and negative 5% down in the next coming days, or roughly a week. So let's examine the technical performance of each model. So we're on the current model, we're down 23% from monthly high, up 5% from monthly low, up or down 5.5% from 10 simple moving average, and down 4.6% from 20 simple moving average, and down 8% from 50 simple moving average. Now we examine the trend that we just found, June 21st to September 15, 2011. It was down 16% from monthly high, up 1% from monthly low, down 1% from 10 simple moving average, and down 1% from 20 simple moving average. And we also have down 5% from 50 simple moving average. Compared to the two technical performances, there are technical similarities among the two trends. Again, these models are now available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.